Good morning, and welcome to episode 102 of Getting Rich. I'm your host, Rich Checkan, president of Asset Strategies International, and today is Wednesday, December 14th, 2022. Well, today is another one of those big days where the Federal Open Market Committee will announce its rate decision after meeting yesterday and today. Many people expect we'll see a 50 basis point or 0.5% increase in interest rates today from the Fed. And many people feel that that lower number versus the 75 basis points we've seen the last few sessions is a result of inflation moderating. The PPI, or Producer Price Index numbers, came out last week at 7.4%, slightly higher than expected. CPI, the Consumer Price Index, came out yesterday at 7.1%, and a lot of people feel that the inflation is moderating, and that's why the Fed is going to go ahead and come in with a slightly lower interest rate increase. Let's face it, CPI is still 7% higher than it was last year. Everything's costing more, and Producer Price Index suggests that we're still going to see more inflation coming through the pipeline as producers pass those costs on to consumers. My question is everything as rosy as people think it is? I think not. We've seen reports here of late that 1/3 of U.S. consumers or households have admitted to paying bills late. Wages have not kept up with inflation for 17 consecutive months at this point. Spending has leveled off, but you got to think that your money's getting 7% less than it used to. So we're still spending the same amount of money we used to. We're just not getting as much for it. And I think people would get as much for it as they could if they were able to pay a little bit more money. So the bottom line is, yes, spending is leveling off, but it's not a rosy picture. And the big thing for me is we've got credit card debt exceeding $1 trillion, which tells me that households are not on firm financial ground, that they are paying their bills basically with credit. This is not a good scenario. Let's take a look at the precious metals numbers. They have performed well of late. Today, gold is at $1,807.40. That's up 2% from last week at $1,772.30. Silver is on a tear. It's up 5.5% to $23.73. It's been as high as over 24 the past day or two, and it's up from $22.48 last week. Platinum is up 4% to $1,037 an ounce from $998 last week, and palladium is up 4% to $2,004 an ounce from $1,924 last week. With silver exploding and gold just inching up, we see the gold-silver ratio come down to 76.45 from 79.15, and the US dollar continues to give a little bit of ground. It's below 104 at 103.85 versus 105.41 last week. At the peak of the dollar's strength this year, just to keep in mind, the dollar was up about 20% so far this year over the past 60 days, and that's really the story. The dollar's come down about 10%. Gold is up in that time frame about 10%, and in the past 60 days, silver is up 25%. It's got a lot of people feeling like we're about to see the bull market leg up that everybody anticipated in 2022. Many feel it's forming now. The bottom line is I think the days of discount gold and silver are coming to an end, and you might want to pick some up if you haven't done so already. If you're looking for that dip, I think it's in the rearview mirror. As always, we'd like you to go ahead and subscribe to us and like us here on YouTube, follow our social media, subscribe to our newsletters, and tomorrow's a great one coming out with an article giving you an update on the gold-silver ratio, getting back to Daisy's question from last week. And as always, just remember one thing, if you remember one thing only, getting rich starts with keeping what's yours.